Hello YouTube and welcome to my October update for my dividend portfolio. Looking at the top 10, not too much has changed in there from last month. LTC properties is coming up, but I am invested in that slightly more in that each month because I'm trying to get to £1 a month dividend. So not really much change there. Portfolio performance, so started the month as it finished off last month. There was a little bit of a dip right at the beginning, so I stuck 200 quid in, which was good timing at that time. So I caught the bottom of the dip there, it went up quite nicely. And then halfway through the month, it started to dip again. So as it was dipping, I decided to stick some more money in of the spare cash I got in the account there, which was a little bit too soon in hindsight because it sort of went up a little bit, which was really good, but then dipped, went up, and then had a really big dip here. And that's where I should have put in, really. About a week too soon. And then it's just started to recover a little bit now. So that's what that is. In terms of investment stuff, it's been a bit quiet month, but for those who are following along, we'll go through the individual stocks slowly. If you want to look at one, just pause it, see how I'm performing. Let me see if we've got any news. I haven't got a lot of news this month. I think it's been quite a busy month for myself personally, work and stuff, so not a lot to tell you apart from there's the War Machine ones are up. So unless you live under a rock, you'll understand that there's trouble in the Middle East. You know, it's not a nice thing, but defence companies, aerospace companies, etc., do really well in that. So BAE systems are up. You see, they sort of went up as the conflict started. They sort of rose quite nicely. Oil's had a bit of a strong run, so it peaked out there nearly £5.60 a share for BP. Had a bit of a tail off these last couple of days, but then the whole market's been down, or my portfolio market's been down. Caterpillar's having a bit of a rough time over the last 3 months, so that's down now from a high of, over the last 3 months, a high of 288, down at 226. That's taken a bit of a knocking, but then a lot of stocks have. Not overly concerned about that. It's just, it is what it is. Like I say, General Dynamics are up. Another one that does defence. Then a lot of the other ones are down. HSBC banking is down. Not as bad as Barclays. I think Barclays had dropped down to about £1.30 a share. I think I sold them out about £1.60. So it's okay. Glad I sold out because they dipped down more. These have dipped down, but not as badly. But down. Everything else, well, it's just a bit of a bad news story this month. It was a very volatile month with lots of things going down. Main Street Capitals, this one I was putting money into extra month to get this to £1 a month, but I stopped because I was in profit on it and I was in loss on another one. Reality, we'll get to that in a moment. But I can see this has had a drop off, so I am going to put back in this one, but I'm going to continue with the Reality one because that's having a bit of a harder knock, so I think it's more of a bargain on that one. Yeah, New Call's doing really well still. Pepsi's doing okay. So Reality. So this is one's had a really hard 3 months and we're down now down to $47. So this is one I'm putting the extra bit of money in each month. I want to try and take advantage of this dip in its share price, if it is a dip, or if it's not a dip and this is what it's truly going to be, it's going to help bring my cost average down and hopefully my dividends up. That's the whole point of dividend investments. So when things go down, they become cheaper to buy, in theory. And if the dividends remain the same, you'll get more shares, therefore get more money for the money you invested. So I'm okay with that. This one has had a tough time in 3 months. It's a good company. I am going to I've put it in the sell pie because I want to slim my portfolio down. So like when I started out, I wanted to go 100 companies. I quickly realised, well, not quickly, it took me about 1.5 years to realise 100 companies is a lot to manage. So I am slowly making some tough decisions, hopefully the right decisions, to slim this down to probably between 50 and 70 companies, which I think I could manage, but we'll see as it goes through. Rolls-Royce had a little bit of a downturn this month, but then what hasn't. But still, in case, had a bit of recovery today at £2.14 a share. So again, still loads of profit in that one for me, at least anyway. And I believe in this company. Again, does well in defence sector as well as the commercial sector, and I'm going to continue investing in this. And then I think my sellout point is going to be roughly around £5 a share, where I'll cash in on that. Unless it starts to pay reinstate its dividend, then I'll reconsider. But that's my plan for that one at the moment. Rolls-Royce. Let's say oil's having another good run. Shell's mimicking BP, had a good run. I've noticed that Chevron, which I sold out last month for 170, had a massive dip. I want to say massive. It dipped down to, I think it was like 150, I think, or 130, one or two. I remember it dipping down. I thought, oh, I think I caught the peak of that one. So that's a small win for me. It's like I don't normally catch the peaks, but I think I did. And that's it really. Nothing else is really jumping out and saying I've had a good month on. There's been quite a few where I think I've had a bad month on them. But then that's, I could say that all over the portfolio. I'll call this one out. So for Vornado, so if you followed along, I was in profit here and I was waiting for my 10% margin. So then I made a bit of a profit on it and it's dipped. So hindsight, if I really wanted to slim the portfolio down, really wanted to, I should have sold there. But I was holding out for my 10% profit, and then because I think I got it to, I think it was at one point around 7%. So I needed it to go up a little bit more, and then it would have been the 10%. But yeah, you live and learn. And that is the holdings in individuals. So like I say, if you're following along or you've got some, this is how mine performing. Let me know in the comments if you're performing better or worse than mine, or if you've got, and if you want to compare, I'm more than happy to go through that. Over to the dividends this month. So starting with my biggest monthly payer, AGNC, I paid out £1.32, which is really good. Excuse me. Automated data processing paid out 56p. Aviva paid its final dividend this year at £1.84. So that was, that give me 3.5, 4, just over £4 for the year. Not too bad actually. And it's having a share price isn't great either, so I'm getting quite a few shares in there as well. Bank of Nova Scotia, I think I pronounced that right. A bit dizzy tonight. £1.44. So great dividends on that. I think that will be the last dividend payment this year. So nearly 50p from the beginning of the year. So that's really good growth in terms of what I've been doing. Happy with that. British Cardinal Health paid out 80p. I'd say I sold out Chevron, so that's what's light grayed out. Chubb paid out 51p. Coca-Cola paid out 45p. Diageo paid out its last payment, or its second dividend payment for the year, at 72p. So Diageo showed great historic signs of growing their dividends, so that's one for the future, I hope. We'll see how it goes. Ecolabs paid out 26p. Franklin Resource, another one there in the financial bits, paid out £1.12. So that's like the fourth one this month over £1. So dividends as a whole are really starting to, a lot of them starting to show over £1 a month now. So I should start seeing next year, hopefully seeing some bigger dividends. Monthly wise, Gladstone Land paid out 16p. GlaxoSmithKline paid out its final dividend for the year at 59p. So I'm really happy with that. Horizon Finance paid out £1.20. So again, extremely happy with that. Illinois Toolworks paid out 60 pence. My iShares ETF on government bonds, 56 pence, so that's good. Kimberly Clark paid out its final dividend for the year at 93 pence, so just shy of the pound. LTC Properties, this is the one I'm trying to get to £1 a month this year as well. So I had a couple I wanted to do to that. I think it will get there. I've got 2 more months to go, and I'm very, very close. So I should get to £1 hopefully, and if I do, I'll be very happy. Main Street Capital, this is another one I was trying to get to £1 a month, but its share price was doing a lot better than reality. So I've stopped investing a little bit extra in that one. I've put it into reality, but that paid out this month at 63 pence, so I'm really happy with that. Metronics paid out 63 pence. Pepsi paid out its final dividend, and that came out at 73 pence. My another bond ETF I have, two very similar, both very similar in performance at the moment, with both share price and dividend. Normally one does better than the other, but at the moment they're quite on a par. So 73 pence again, 82 pence. So I'm quite happy with those. Prospect Capital, so when I did get to £1 earlier in the year, paid at £1.27, so really happy with that. Reality Income, so this is the one now I'm putting extra money in, paying me out 50 pence. If it gets to 6 pence by the end of the year, I think I'd be happy with that one. Like I say, it's having a bit of a rough time with share price at the moment, so I'm seeing it's quite a bargain. Roper Technologies paid out 14 pence, its final dividend. Stag paid out 36 pence, so quite steady that one. If you look at the historic, so quite happy with that. Cisco's paid out its final dividend at 62 pence. Again, happy with that. The renewable infrastructure got to £1, which is really good because I think I only added it back end of last year. So that's already £1 a month. So again, really happy with that. 24 monthly select. So this is the one, my risky one. I've been thinking about it for ages. I've done it, I did it, and I just put the money in and got to £1 a month because it was really cheap to do that. And that paid me out £1.11. So that's really good. Vanguard UK government gilt, so government bonds, 23 pence. So down a little bit really. It's a bit underperforming. The US bond one paid me out 43 pence, so that's okay. VCI Properties paid me out their final dividend at 82 pence, so I'm reasonably happy with that. And last one, my Whitestone REIT paid me out 25 pence, giving me a total of, with the interest of the few quid I got left in there in cash, 87 pence, I got a total of £25.04 dividend for the month. So comparable to my Super September, but comparable across. So it's not where I need it to be. I think I need to average £26 a month to hit my dividend target for the year, but it's going to be close. On to the overall numbers then. So my investment value now sits at £10,192, so obviously down a couple of £100 from last month. My return on investment for the year so far without the dividend reinvestment is just under 4% and just over 3.5% with dividend included, giving me a return on investment this year of 7.69%, which is pretty good considering I was at a loss earlier in the year. So like I say, got best part of £250 so far this year in dividends. The dividend yield is sitting at 4.9%, so still very, very close to getting to that 5% by the end of the year, which was my target for this year. I think I will do it. And my capital growth this year is sitting at £127, going down because of the downturn this month, but still not a bad profit. And that's that. So then let's have a look at the charts quickly. I've got the zoom right. There we go. So number one still is BP. Number two is Shell. just there. Number 2 for Shell. Number 3 AG, NC. Number 4 Prospect Capital, and then Penning Group as number 5. There you go. So you can see they're all slowly growing, some faster than others. So I am pretty happy where I am with that. Looking at the dividends per month chart, seeing a nice sort of trending upwards, which is what I want to see. And I think, yeah, my average needed to be about £26 a month to meet my dividend target. So let's have a look at the ISA. So this month I put into the fund £399. So that would give me a balance of £9,076. I'd have had £30 interest this month versus the £25 dividend. So the ISA wins again this month and is slowly catching up my portfolio total value. It's only just about £1,000 behind now, give or take a couple of quid. So this year is looking very strong for a win for the ISA. And last of all, then let's have a quick look at the predictor. So I wanted to do 50k in 5 years. I'm now sitting at, what's that, 12 years. So not the best. How am I doing on my targets? So predicted dividends was £312, so I'm still £60-ish off that. So I don't think I'm going to make that, so that might be a red this year. My capital growth though, I was in front on that, had made that, but now I've dropped off a little bit. So still recoverable. And the fund, as long as it doesn't go down anymore, I would have made that metric. So I might have 2 green and 1 red this year. That's not bad. Okay, so that is that. If you like the video, or I assume you like this video because you've watched it this far, please give it a thumbs up. It really does help me out. And they've started doing the free shares again. So I'll put a link in it. I used to show you the code, but it doesn't do it anymore. I will put the link in it in the description below. So if you want to join Train 212, then please use my code. You'll get a free share and I'll get a free share, and any free shares I get, I'll sell at the end of the year and donate the money to charity. Okay guys, thanks for watching and I'll see you next time.